Forex Trading Details. Now, Forex Exchange market is a global market, and the market itself determines the rate of Forex pairs. So there is no foreign government or player determining the rate of Forex pairs. It's calculated or set by the market participant themselves. The one who is buying will be putting up a price, and if the seller agrees, then he will sell, and therefore it's a complete market. No one controls it. Forex market is the second biggest market after the debt or credit market. So it's one of the biggest market, and in terms of retail investor, it's one of the biggest, because in the debt of credit market, the retail investors are there, but mostly they are like far more active in Forex market in terms of debt market. Major players in Forex market are the big banks and hedge funds, because basically they have the biggest buying or selling power. As currencies are traded in pairs, therefore the exchange does not set a value to them, because it's one pair, let's say US dollar against Great Britain pound. So it's in a pair. Pair usually means that one US dollar is worth 1.1 Great Britain pound. Behind the scenes, banks run firms known as dealers who help in trading. These are the dealers that basically makes the market. They are the market makers. This trading market is called interbank market, where the banks trade in between themselves and the dealers help them. Forex market helps international trade by showing an exchange rate. So people would know that this is the exchange rate. If they buy a 1 US dollar, they would need to pay 1.1 Great Britain pound. And that's how it helps the international trade, because without an exchangeable rate, no one will be able to sell or buy, because they won't know what their thing is worth. In purchasing a pair of Forex, you purchase one currency by selling the other currency. So it's simple. You're getting one currency in exchange for the other currency. And that's how a pair in Forex is formed. Modern market was formed in the 1970s under the Bretton Woods system. In early days, the exchange rates were fixed. So it was fixed that 1 US dollar will be based on 1.1 Great Britain pound. But now almost all Forex currencies are based on floating exchange rates, which means that the market determines the rate and it's not fixed. And therefore, you can easily make money through them because it's not fixed. In a fixed rate, it doesn't change. So no one can trade the market and make money. And therefore, the rate is fixed. In a floating exchange rate, you can hear news that help build a strong market. It helps make easy money. Forex market is the most liquid market in the world, because at every time someone is selling and buying. So there is liquidity in the market, and bigger or smaller player can easily buy or sell. Forex market works 24 hours a day. Therefore, for a day trader, it's a heaven. However, Forex market offers lower margin, so the return rate is far lower. Now, many brokers offer high leverage, but I'm against them. I usually suggest you to have 100% of your own money with 20, 30 or 40% of leverage. So it means 140% of the buying power. Now, if you will look for Forex broker, they usually offer 1000 times leverage as well, which means a small move against you will wipe out your account within seconds. Therefore, as a day trader, your first aim is to be in the market, is to be a trader. Therefore, you don't take high leverage, because at the end of the day, money will come to your account automatically. My plan is so good The question remains, a high leverage can wipe you out. So you have to trade in ways which makes you in the market, and you should not be wiped out. Now Forex market is a 5.09 trillion market per day, and I am using it as an average number. So on some days it's more than 5.09 trillion. So just look at the magnitude. That's why it is so liquid market and money making market. Thank you.